Okay, so when you see that, that instantly recognizable Airbnb logo, most of us, we immediately think booking a place, right? A cabin, city apartment, maybe even a treehouse. But what if there's actually a whole lot more to Airbnb than just, well, finding a place to sleep? Today, we're going deep. We're diving into Airbnb's latest numbers, their strategy, fresh off their Q2 2025 filings.
Exactly. We've got the 10Q, that's the detailed quarterly report they follow with the SEC, and we also have their shareholder letter, which gives more of a story,
Hmm.
their performance, their plans. It's a really good way for you listening to get up to speed fast on how the company's doing, what their big plans are, and honestly, some surprising hurdles they're facing.
Right. So our mission here for this deep dive is really to pull out the most important stuff from those documents. We want to uncover maybe some surprising facts, understand the why behind the numbers, the big strategic moves, sort of cut through the noise and get to what really matters for you, whether you host, travel, or you're just curious about this travel giant.
Okay, let's start with the big picture then. Airbnb's Q2 2025 financials. They had a strong quarter. Revenue hit $3.1 billion. And what's interesting is it has a 13% jump year over year. And that 13% holds even if you take out foreign exchange of currency swings, which tells you the underlying business is pretty resilient. Demand seems strong, regardless of global economic stuff.
Okay, that's fascinating. So the top line, the revenue, that's solid. But what about profitability? How's the bottom line? Things like net income.
Adjusted EBITDA.
Yeah.
What do those tell us about how efficiently they're running things?
Great question. So net income grew 16% year over year. That's $642 million. Yeah, that high margin really shows their operational leverage. Their costs aren't climbing as fast as revenue. It points to a very efficient, very scalable model.
And I guess an efficient business usually throws off a lot of cash, right? How's their cash flow looking?
Exactly. That's a key point. The free cash flow is immense. It's like a strategic war chest for them. They reported $1.30 billion in free cash flow just in Q2. That's a 31% margin.
Just in the quarter.
Just in Q2. And if you look back over the last 12 months, the trailing 12-month free cash flow, it's $4.3 billion, a 37% margin.
Okay.
This huge cash generation, it directly fuels their expansion into new services. Those big share buybacks we'll probably talk about. It really signals confidence.
Okay, so beyond these headline numbers, what's really driving the growth? Let's dig into the metrics that show, how many people are actually using the platform, how much are they spending?
Absolutely. So a key one is nights and seats booked. Basically how much is being used. In Q2, they hit 134.4 million. That's up 7% year over year. What's also interesting is that number was pretty stable compared to Q1. So it shows sustained high-level activity.
Okay.
Then there's gross booking value, GBV. That's the total value of all the bookings, host pay, fees, taxes, everything. For Q2, GBV was $23.5 billion, up 11% year over year, or 9% if you strip out the currency effects.
Right.
And GBV is super important because it's a leading indicator for future revenue. So continued growth there suggests strong underlying demand.
And the price per night, what's the average daily rate, the ADR telling us?
Yeah, the ADR, it was $174 in Q2. That's up 3% year over year. The report says this was mostly price appreciation, plus some help from foreign exchange.
Okay.
But it's not the same everywhere. Like in North America, ADR went up 3%, mainly because people are shifting towards short-term stays and booking entire homes. Those tend to cost more.
Right. Makes sense.
But then you look at Latin America, ADR actually declined 3% because of currency effects.
Yeah.
But if you take out the currency impact, it increased 2% because of price appreciation. So it just shows, the different dynamics they're juggling in different markets. They have to adapt locally.
Yeah, that really highlights how they're not just tweaking the existing model. They seem to be pushing hard into new areas, expanding offerings, global reach. This is more than just perfecting the core, isn't it?
On that, absolutely. I mean, on perfecting the core.
Right.
Sure, they've made hundreds of tweaks, smoother checkout, flexible payments, that kind of thing. And they're really leaning into AI now.
Yes.
They expanded their AI-powered customer service agent to cover 100% of U.S. users. And apparently that led to a 15% drop in contacts needing a human agent.
Wow.
And they plan to roll that out globally. So that should boost efficiency, maybe improve user experience, and, free up humans for the really tricky issues.
And the global push, are they seeing actual results from expanding into new countries?
They really are. It's quite striking. For 6 quarters straight now, their expansion markets have grown at roughly twice the speed of their core markets.
Twice the speed.
Yeah. And they give examples like Japan. They ran a campaign focused on domestic travel. It led to more nights booked by Japanese travelers and a 15% year-over-year jump in first-time bookers in Q2.
Impressive.
Or Brazil. Nights booked from there increased at a, high teens rate. First-time bookers grew around 20%. They mentioned new local payment options helped there. Germany also saw double-digit growth in nights booked. It really shows their strategy of making Airbnb feel local and relevant everywhere is, well, it seems to be working. They're tailoring it.
But it's not just stays anymore, is it? That big summer release back in May 2025, they launched Airbnb Services Reimagined Experiences. That sounds like a pretty fundamental shift.
It's a huge pivot, yeah. And alongside those new things, they launched a totally new app design, meant to blend homes, services, and experiences all together seamlessly.
And how's that going? Early days, I guess, but...
Early days, but the signs are positive. They say awareness is growing. Guys' feedback is apparently overwhelmingly positive, like average ratings over 4.9 out of 5 stars.
That's very high.
Very high.
Yeah.
And they've had huge interest from potential new hosts for these services and experiences, over 60,000 applications since the launch.
Wow.
So it suggests there's real market appetite for this more integrated travel offering.
Okay, but to support all this expansion, especially beyond just rooms, they need supply. Properties, service providers, experience hosts. How are they managing supply growth? And what about quality?
Good point. Yeah, active listings are growing, actually slightly faster than nights and seats booked right now.
Yeah.
Their strategy seems twofold. Targeted acquisition, so going after supply in markets where demand is really high.
Makes sense.
And also helping existing hosts make their places available more often, like their co-host network that now supports over 100,000 listings. And those co-hosts have helped facilitate over 10 million nights booked, so they're leveraging the community there. And quality is definitely a focus. They mentioned removing over 500,000 low-quality listings since 2023.
500,000.
Yeah, which they say has cut down customer service problems and chargebacks. Plus, they highlight things like guest favorites, over 400 million nights booked in those top-rated places. And superhosts are still really active, booking 12% more nights year over year. So quality listings seem to be doing well.
And they're also making moves outside the platform itself, right? With these big global partnerships. I saw Tour de France, the Lollapalooza festivals, the Olympics in Milan, FIFA World Cups. What's the strategy there beyond just getting the name out?
Yeah, those partnerships are super strategic. It's not just brand awareness, though that's part of it. They're designed to directly drive supply growth in key cities and countries linked to these massive events.
Okay, so getting hosts on board where they know demand will spike.
Exactly. And what's also interesting is how they use these events to show they can spread travelers out beyond just the city center hotels, a more hyper-local impact, they call it. It lets them demonstrate, look, our platform can handle huge numbers of visitors, but integrate them more broadly into local areas, not just cram them into hotel districts.
Right, distributing the impact. Okay, interesting. Let's shift gears a bit now to, well, the trickier side of things, the legal and financial waters they're navigating. Given all that cash flow we talked about, what's their plan for returning capital to shareholders?
So their official line on capital allocation is first, organic growth, second, strategic acquisitions, and then return capital to shareholders. And they're definitely acting on that last point. They bought back $1.0 billion of their stock, the Class A common stock in
Q2 alone.
$1 billion in one quarter.
Yep. And just recently, in August, they authorized another $6.0 billion buyback program.
Wow.
These buybacks are having an effect. They said they're...
Legal fights, right? Stuff that can eat into that cash.
Indeed. It's a constant challenge. Take lodging taxes, for example. Airbnb collects and sends those taxes in about 33,000 jurisdictions. As of June 30th, that obligation was $465 million.
Okay.
And they estimate potential additional losses related to this, maybe $52 to $62 million more than what they've already set aside. Then there's Italy. That's been a big one. They had major settlements with the Italian tax authorities over a 2017 law about withholding host income tax and collecting tourist tax. The numbers are huge. $576 million, that's like $621 million for the years 2017 to 2021.
Wow.
Then another $139 million, about $150 million for 2022, and $179 million, roughly $186 million for 2023. It's worth noting they actually started withholding taxes on Italian listings in 2024, so that's ongoing now.
And the disputes aren't just in Italy, right? I think I saw Spain mentioned, and even the IRS here in the U.S.
That's right. Spain's Ministry of Consumer Affairs proposed a $110 million fine just in July 2025, alleging noncompliance with rental listing rules. Airbnb says they're going to fight that vigorously. And then, yes, the IRS audit. This is about how they value their international intellectual property. The IRS proposed adding $1.3 billion to their U.S. taxable income, plus penalties and interest.
$1.3 billion. Wow.
Yeah. Airbnb strongly disagrees, and they took it to the U.S. tax court back in July 2024. So you see this pattern, right? Substantial fines, audits, settlements across different countries. It's a fundamental, ongoing challenge for them as they operate globally. It definitely impacts their strategy, how they use capital, maybe even their brand.
Yeah, that's a minefield. And on top of specific disputes, there's new U.S. tax law too, right? Like the corporate alternative minimum tax from the Inflation Reduction Act and changes to R&D expensing.
Yeah.
Plus global minimum tax rules, just layers and layers of complexity.
Absolutely. These new tax laws just add more complexity to their global operations. They need constant monitoring and adaptation. But, to help manage some related risks and build trust, they do have their air cover program.
Ah, right. For hosts.
Yeah, offering hosts up to $3 million in damage protection, $1 million in liability insurance for hosts and experiences. That's not just customer service. It's actually a critical piece in navigating these regulatory issues.
Yeah.
It addresses core concerns about liability and trust, which often underlie the very regulations they end up fighting.
Okay, so bringing this all together as we wrap up this deep dive, it really feels like Airbnb's Q2 shows a company that's not just holding steady, but actively pushing boundaries.
Yeah.
Expanding its reach, diversifying way beyond just stays, becoming more of a full travel platform.
Yeah.
But at the same time, juggling this incredibly complex global web of rules and taxes. That massive cash flow is clearly a crucial buffer.
It really is a fascinating balancing act, isn't it? Aggressive growth on one hand, mitigating these big global operational risks on the other. Looking ahead quickly to Q3 2025, they expect revenue between $4.02 billion and $4.10 billion.
Yeah.
That's about 8 to 10% year-over-year growth. Not much currency impact expected there.
Yeah.
They do expect a slightly lower adjusted EBITDA margin in Q3 because they're investing in growth initiatives. But importantly, they're sticking to their full-year target of at least 34.5% for that adjusted EBITDA margin, even with the investments.
Got it.
They mentioned being cautious about the macro environment, but so far, no major impact seen.
All right. So here's maybe a final thought for you, our listener, to chew on. Airbnb started with this core idea, right? A community based on connection and belonging. How does its really aggressive push now into services and experiences, plus all these ongoing global regulatory and tax battles, how might that fundamentally change what we even mean by travel or local engagement in the years ahead? What could this mean for your future trips, your interactions with travel, and maybe even your own local community? Something to think about.